There is a home with no ceiling for potential and no room for anxiety. And we believe that those who seek it must be shown the best way to it. At PropertyGuru, we do more than just match people to property. We help builders welcome the future and introduce agents to new opportunities. More than a list of addresses, this is where the right destination finds the right person for the right reasons. Whether you build, or sell, or seek, we'll see you home. PropertyGuru will see you home.
Hi everyone, welcome. Let me just share my screen.
Hey.
Hi Nai Jia, how are you?
Hello everyone.
Okay.
Hi Paul.
Hey, hi. So welcome. Let me introduce myself. My name is Paul Wee. I'm VP of FinTech in the PropertyGuru Group, and I run PropertyGuru Finance. And we have here my colleague Nai Jia, who I say is the smartest man in PG. You know why? Because he's the head of real estate intelligence. So maybe Nai Jia, just a few words about yourself.
Hey everyone. Oh. Okay. Just give me a minute. Yeah. Just give me a minute. There are some minor difficulties. Hello. Yes. Thanks. So hi, I'm Nai Jia. I previously worked in IRUS and US. So I just joined PropertyGuru. I'm heading the real estate intelligence unit and to provide you with the latest market intelligence. Yeah.
Hence the smartest man in PG.
No.
So today we're going to be talking about the latest cooling measures. A lot of people are very wondering what's the impact, what does it mean actually. Some people have been asking us questions, and we thought this webinar would be a good way for us to just run through the questions. Now, if you have questions, just put it in the chat group, and my colleagues will be collating and we'll be answering them at the end. So don't wait until the end before you put your questions. Put it up front so that you have it on top of mind. Okay, so let's get started. So the first part, we will be covering what the cooling measures are, and then what the impact is on the Singapore residential market, and then finally the Q&A part. Like I said, some of you have already put in some very good questions, and let's proceed. In the interest of time, we will try and leave more time for your questions, so ask away. So what are the cooling measures? The first one is the increase in total debt servicing ratio and mortgage servicing ratio by 0.5%. I'll explain that in a few minutes. Reduced loan to value from 85% to 80%, and then the 15-month waiting period if you sell your property and want to move into HDB flat, 5 rooms. Yeah. Now, this one is the most significant one. I think it will be quite interesting to talk about that. Okay, we haven't seen that before. So let's talk about this first. Total debt servicing ratio and mortgage servicing ratio calculation has been increased by 0.5%. I think this one, we have to first understand what it means, right? Now, total debt servicing ratio was first introduced in 2013 when banks were actually using an interest rate. So every time we go to the bank and say, I want to borrow to buy a property, the banks will use an interest rate in-house. It could be 3%, 4%. Different banks had different rates. Now, all this was standardized in 2013 when the government launched MAS 645, which says you have to use 3.5% for residential property, non-residential 4.5%. Because before that, people were shopping around banks, looking for banks with the lowest interest rate to calculate. Now they standardize, right? Now, this 3.5 to 4% increase is 0.5%. Actually, this is something that we suspect the MAS is looking to just ensure that we stabilize, because current interest rates are moving to the 3.5% already. If it goes to 3.6, then you have to use the higher rates. And if you don't define these rates, banks would then start using different rates. And in our opinion, this is just something that to standardize, make sure there's stability in the market. Okay. And I think it's good for the market that we have such standardization. The behaviors will be, buying behavior will be curtailed, nicely regulated when you look at that. Okay, let's move to the next one. Now, this breakdown of cooling measures, what does it mean about the TDSR interest rates? Now, let's say this 35-year-old earning 10,000 with no existing liability with a loan period of 30 years. Now, based on 3.5%, they can borrow up to 1.22, right? Based on 4%, they can borrow up to 1.15 million, right? The difference is about 70K, all in about 6%, okay? Now, what happens if this was 6 months ago, right? 6 months ago, somebody bought the property, want to buy a property, interest rates may be lower than 3.5, right? All banks are required to use the 3.5% as the basis of computation. Now, bearing in mind, interest rates were about 0.37. The 3-month SIBOR was about 0.37 in 1993. Oh, sorry, 2013. 2013. So all banks are forced to use higher to protect the consumers. Okay, so this is what it means. Now, the difference is not really very much. If you look at this, it's only down by 6%. Now, the MSR, it cannot exceed 55% of the total income. So, in other words, if you borrow on a property together with credit cards and other loans, it cannot exceed, for this gentleman or lady's income, cannot exceed by 5,500. Cannot go over 5,500. This one that we calculate is based on 5,500, right? Maximum. Now, if you are buying a HDB property, there is a figure known as mortgage servicing ratio. Now, mortgage servicing ratio means is what you use to buy to service the loan, the amount that you use to service your HDB flat. So in this case, right, again, the same person, 35 years old, 10,000 income, but 25 years, that's the limit you can borrow up to. Originally, they can borrow up to 599,000. After the drop, after the increase from 3.5 to 4%, it's also about 5 to 6% decline. So again, very marginal. So like I said, this introduction, in our opinion, stabilizes the market to ensure there is uniformity. Okay. If you have any questions about this, I know I'm going through quite fast, but please put in your questions now. Okay. Now, what is interesting here is, now in the past, HDB loans, the loan that HDB lends to buyers was 90% loan to value. Then it dropped to 85%. And then now it's dropped to 80%. Okay. Now, what is interesting in this introduction is that there is a new interest rate floor now of 3%. Meaning, if you go to HDB and you say, I want to buy a BTO, right? The HDB will use a 3.3% now as the interest rate. Okay. In the past, they used 2.6 because that was the rate at which the interest was. Now, CPF or HDB charges interest to the borrowers at 2.6%, which is defined as 0.1% above ordinary account. Why do they do that? It's because the government funds HDB at that cost of 2.5%, right? So they take a margin of 0.1%. In this case, if they tell you that the interest rate floor goes up to 3%, they could be signaling that ordinary account rates could be going up to 2.9%. This is what we suspect. Otherwise, there's no reason for them to use these rates. The other point is this: the latest savings, Singapore government savings bonds in November is about 3%. So roughly in line with what we are thinking, but only the time can tell. The next due change is in January, right? So 4 times a year they can change. January, I think April, July, and October. Right? We passed the October one. Let's look at January. Okay. Now, for those people who are borrowing on your loan, right? And you're using CPF to service this, in a way, there's no impact because you are earning 3%, I'm guessing, or earning 2.9% and paying 3%. The difference is 0.1. Right now, you're earning 2.5, you pay 2.6, the difference is 0.1. So minimal impact on those people using CPF to service your loans. Okay. Now, this is the part that is most interesting. And Nai Jia will talk to that even more. Nai Jia is I told you, the most intelligent man. So in the past, right, the government always has rules controlling those people who are selling properties. Even if I sell a private property, for me to re-enter the market, it only impacts me if I take a grant or buy direct from HDB in the past. That rule still is in play, meaning if I sell my private and I want to take a grant or I want to buy from HDB, I have to wait up 30 months. Okay, that has always been the rule. But now what is interesting is now if I sell my private property and move into HDB, I have to wait 15 months before I can do so, right? So this is most interesting because now they are hitting the market where previously it was not regulated, right? And this could be something to do with how the government is trying to regulate the demand and supply in the market, okay, for HDB properties. This whole scenario that we see, the cooling measures, mainly targeted at regulating the prices in HDB. That's my opinion. Yeah. But the exception is this: if you are 55 and above, if I'm going to buy a property, like smaller than a 5-room flat, so I sell my private and I move into a 4-room flat, I'm exempted from the 15-month wait. Again, Nai Jia will share with you what the impacts are, what the questions are, considerations when it comes to that. Okay. So I move over to Nai Jia.
Hey, thank you, Paul. Yes, that is the smartest man in PG. So now it's my turn. So how will the new cooling measures impact the Singapore residential market? I think we should see some knee-jerk reaction. Usually, when there's some form of announcement of new cooling measures, sales will definitely see certain impact. We should see certain kind of contraction. So a lot of buyers and sellers will be recalibrating their expectations. What we will notice in the past is that the price gap is going to be widened. So the sellers are unlikely to change their prices, but the buyers are going to be probably, try to reject their expectations because they probably, after looking at their budget, may be impacted. But if we take a step back, interestingly, if you look at a lot of the private properties, because we know that the URA HDB markets, they are actually very segmented. So what happens is that there will be a certain group of buyers that are affluent, that have sufficient cash. So this group of buyers will not be affected, and the markets that these buyers are usually at in the district 9, 10, 11, the very prime districts, the GCB markets, the landed home market. So for this group of buyers, we are unlikely to see them being impacted. The other one, which is a bit harder to read, is those who rely on parents' financing, right? That is the indirect financing that we are seeing a lot today. A lot of the younger buyers actually rely on financing or help from their parents who belong to the baby boomers generation. So that actually helps them to afford what we see in the market prices today. So where will this cooling measures impact? It will impact on those people who are at the margin. That means people who are, who are very equity constrained, they borrow to the hilt to upgrade or to buy their HDB flats that they want. The other group will be also those what we call the downgraders. But these downgraders are not those baby boomers who want to downsize for retirement. This group are allowed based on the 15-month wait. The ones that are more affected are those who want to, cash out the equity and move to the HDB. Those group of buyers, because of their cash and capital flush, because they are flush with capital, they are able to afford to pay a bit more in terms of COV. So that is why I think the government is trying to control that side of the prices. So the biggest impact we should see is actually the HDB resale market, but actually at the more high-end type, like those in the mature estate, new ones like Dawson type. I think those we will see the prices hitting the resistance level. Now let us go to the next slide. So to give some context, I think one of the triggers is really we see a lot more of the HDB resale flats sold for at least 1 million. I think that is the one that actually grab more eyeballs. So I think what the government is trying to do is trying to temper the demand, make sure that the people are able to afford the prices rather than trying to come out overstretch their finances. But I think in a lot of people's mind is, why do people actually pay such a high price for a resale flat, say in Dawson? And the reason is, in the mature estate, for such a relatively large unit, if you don't mind not having any of the amenities the condominium has, it's actually quite value for money. If you look at a condominium for 1.4 million, you probably could get only a 1-bedroom unit, which is about 500 square feet or so. So I think that is, or 600 square feet or so. So I think that is the basis why people are starting to go into this kind of flats, which they find more value. So the other reason is because if you look at those that are transacting at above 1 million, initially we see mostly in the Dawson estate, those very new estates, Boon King, etc. And it starts to move outwards to the other residences, other HDB towns. You can now see that there's $1 million flats in Tampines and those in Woodlands and other places. And the reason is those that are being transacted above 1 million are those actually are very large units. They belong to a previous generation of flats known as executive apartments. They can be mansionettes. That means there are 2 levels or 1 flat level with about 1,300 to 1,500 square feet. So to put it into perspective, in the condo sense, is close to a 3-bedroom or 4-bedroom type of size. So that is why, if you think about it, it actually makes some value sense to some of the buyers. So, but I think it's going to, the problem with all this 1 million HDB transaction is it will pull up all the prices of the resale flat. So I think the government is very conscious of that and trying to temper the demand. Now, let us go to the next slide. So if we look at the HDB resale prices, things are really looking up, but we also sense that it's also kind of hitting kind of a resistance level. The later quarters, if we look at the anecdotal evidence that is driving the resale prices, is actually in the outside central region, because in the central region, more or less, they've reached their resistance level of 1+ million. So we are seeing a bit more rising in the other areas. So let's go to the next slide. What about our own PropertyGuru property sale price index, which is based on the sale listings? we also see them also rising steadily. So this, we have seen it going on. And the interesting part here is that in the event when, when there's an external shock, like in 2020 Q1, when the pandemic first started, it's very interesting that you see that the asking price actually continue to go up. In other words, the whole market, when you come to the asking price, tends to be very sticky. So I think that even with the cooling measures, you will not see the asking price change. In fact, it may still move up because based on certain confidence of how the economy is performing. So let us go to the next slide. And we see this is the URA private property prices in the Q3 2022. Again, we see very strong performance in the OCR. This is helped by the recent launches in the OCR region, like Amore residences, that really help boost the price index in the area, because that again is because of the lack of new supply. So because of this lack of new supply is helping the condominium prices to set new benchmark. So this, from this, what we are seeing is also why some of the private homeowners, they are thinking of cashing out equity. So those who cash out their equity, unfortunately, will be caught under the 50-month wait, unless you belong to the 55-year age group. So if you look at our index again, using the what we see here in the index, again, when the pandemic started, right, that is when actually, if we look at the actual transaction prices, there are some that actually went down. But if you look at the asking prices again, it has not gone down, it just stabilized. Then after that, it started to move up. So with all these cooling measures, what we will expect to see from our perspective is that the selling price from the listing prices, if you go to the search for properties, you'll find that the prices actually didn't change at all. In fact, they may still go up because of higher inflation. People want to cash out and push the prices higher to meet their needs. Okay, so let's go to the Q&A.
Okay.
The fun part.
Yeah,
Right.
thanks, Nai Jia. Let's handle a few of the questions about the cooling measures first. I think you have quite a lot of questions, Nai Jia. Get ready.
Yeah, I know.
Maybe I will handle this one first that came through. I think one of the first questions we got. I was planning to sell my condo and move to a HDB flat. And the plan was to release money from my condo. With the new 15-month waiting period, what options are available to me? I think really it depends on your personal circumstances. I think here at PropertyGuru Finance, we deal with a lot of such questions when the clients come to us and say, what do I do? Is this the best time to do it? And so on and so forth. I think first of all, we have to understand what circumstances there are. Now, we've had clients who were during a pandemic circuit breaker, were struggling because they needed cash flow to go through the period. So they were actually very afraid and they were looking to sell. Now that at that point in time, like Nai Jia mentioned, prices stabilized, but they could not get buyers to buy. Those are the ones, and they did not want to cut the price. So one strategy is to look at your current loan and look at refinancing to bring down interest rates. Now, look, if you are planning to sell, chances are you haven't refinanced for quite a while. That's the first thing. So look at interest rates there. And in addition, if you need cash flow to tide the next 3 to 5 years, ironically, you should be looking at equity term loan, meaning you take some money out of your property in the form of a loan. Interest rates, while they are high, they're not that high because a lot of businesses, a lot of people suffer because they are not able to generate cash flow. The cash flow will help you go through that period, right? Of course, there's the other way, which is to sell your property and rent and wait out 15 months or find an alternative way of staying, right? These are the options available to you, but please don't I think it's dangerous to say, oh, this is the thing for me. I think it makes more sense to sit down and analyze it with a trusted advisor. And you can certainly find those in PropertyGuru Finance. We will help you walk through this. Yeah.
Yeah, just to add on to Paul's answer, right? If you think about renting, you just have to take note that the rental market is at an all-time high now, partly due to because of, there are very few completed units. They are coming, but due to the disruptions in the construction sector that we are seeing, so rentals are very high. They have reached historical high. So even if you go to JB, the rents are also driven very high because a lot of the Malaysian workers, we realized, have went to Johor to stay. So the rentals are also very high. So I think when you think about rentals, just have to be careful of that particular option. Yeah.
Yeah. Nai Jia, I think the next question will be yours. Will HDB 4-room flat prices come down?
Right. This is a very interesting question. There are two things that we are seeing in the market. The first thing is that when prices have reached a particular level, when people could not afford a particular type of flat, they move first to the older flats, but still same floor area, but within the same vicinity. Then after that, what we are seeing is that people are moving with their cash to outside the most mature estate. That means the newer estate. So that's why you see that most of the prices that went up are like places that you never have expected, like Woodlands, Pasir Ris, Bukit Panjang. All these areas have seen very significant appreciation. So will the 4-room flat price actually drop? I think that for the time being, no, it won't. And the reason is being that those who are staying in the 5-room or 4-room, when they move, they are looking for 5-room, they may think about it and say that maybe they should stick to another 4-room, or they should just not move. So on one hand is that the supply of listings for 4-room may actually contract because people realize that there's no point in moving up because it's too expensive, fewer units in the supply, unless the price is high enough. So in terms of the pricing, like I said before, we don't expect it to come down. In fact, you will see the listing price go up because for them to move up to the next level, they need more cash and equity. So you'll see actually that, interestingly, the prices will go up in that sense.
Okay.
Okay.
Okay, next question. Due to additional cooling measures, is it still appropriate to sell EC at this juncture? You want to handle it first?
Sure. EC. For EC, right, I think there are a few things that you need to consider, right? Because some of them are reaching their 5-year. Obviously, you have reached the 5-year. Then the next question is, are you reaching the 10th year? So there are two things that to consider, because when you reach the 10-year, your market is actually wider. You can sell to more different groups of people because it will be a full condominium. But one thing to take note is in such a rising market or in such an uncertain market, when you sell an EC now, you must know what you want next. So if you want to buy something of similar size in the private condo, you may find that you have to fork out equally much to afford, because you are competing now with the other group, which is cash-rich people who are not really bounded by this financing constraints. So I think do think carefully about why you want to sell. Sometimes it's due to demographic reasons, idiosyncratic reasons. I think those don't have a right time. Those, is circumstantial. If you need it, you just have to move. Yeah.
Yeah, so that's a good point, Nai Jia has made. I think it's important first to decide where you're moving to. It's a lot of clients come when they speak with us, they say, I want to sell. And then when we have the conversation of what they want to buy, they get stuck there. So it's very important if you're looking to move for one particular reason, or I want to buy because a very common one is to move near a particular school. Then it may make sense, yeah, because your child is coming up to the age, you're moving up within 1 km and so on and so forth, right? That is a consideration. But sometimes I want to unlock value, I want to take cash out. Then if you must remember the caveat holds, you buy high, you sell high. Right? If you are selling your property now at a high price, chances are you're buying at a high price, and vice versa. If you're selling at a low price, chances are you are buying at a low price. So these are all individual circumstances that we advise you to don't go by general rules, but understand. You begin with the end in mind, and you decide, okay, how do I proceed there? Yeah. Now, if there are follow-up questions to what our comments are, please put into the chat box. We'll be glad to handle it. Yeah. In fact, we scheduled more for Q&A than we did for our own pieces, because a lot of clients were coming to us asking us for advice on what to do next and so on and so forth. Yeah. Okay. So next question, what are the options available now for me to manage interest rates? I'm on the SIBOR package now. Interesting. Okay. So usually there are a few categories of interest rates that people are looking at. Firstly is whether it's fixed or floating. So you probably read by now that some banks have raised their fixed rate package to 3.5 or 3.75, meaning you're locking at that rate, even though now the net rate is lower, it's about 2.6 gross. Okay. The risk is that you are afraid that the rate will go above 3.5%. You want to cap your risk. So, a good friend of mine, for example, cannot sleep at night because if it's on floating rate, any kind of floating rate, he said he's stressed. He's happy to pay more in order to get stability. Okay, so that's the first thing, whether it's fixed or floating. There are a lot of options available depending on your own personal circumstances. There are hybrid loan structures that we can use. So for example, if you're a person who has got good cash balances sitting around, because people generally, the older generation, like myself and older, tend to have cash sitting around for backup funds. And a good strategy is that you can use these funds in loans to reduce your interest rates, and you can still tap these monies anytime you need. So there are pluses and minuses for each individual. So the other thing is the type of rate. Now you mentioned you're on SIBOR. SIBOR rates are actually has been very, very attractive, but because of the changes, I can't remember how much SIBOR is now, but it's gone up substantially. Now, when the market turns downwards, SIBOR will be the first ones that drop. But it's interesting to note that by 2024, 2023, thereabouts, the banks will start withdrawing the package, right? Because SIBOR is a package that is a rate that's managed by the Association of Banks. They have pulled it to be under MAS, right? And the package under MAS is called SORA, the Singapore overnight rate average. Okay, so it is a good time to look at it now, even though you think interest rates are going up, because rates like SIBOR will disappear. If you do nothing, the bank will write to you and say, we are going to be withdrawing that package, right? So consider your options now. Look at what you are planning to achieve, right? Are you afraid that cash flow is an issue or all these things? There are strategies that we can teach our clients to use, which are a bit counterintuitive, but very practical. So that's where we are. Yeah. So contact us at PropertyGuru Finance. We'll help you with that. Okay, Nai Jia.
Yes.
Next
What
one
is my view on CCR? Yeah, CCR is my favorite. Okay, for CCR district line properties, there is a few caveats. Whether we are talking about the very good class bungalows, those are a group of properties that are really doesn't follow economic fundamentals, because at any point in time you always have this top 1% richest people in Singapore, and they will be looking at prime properties. So they don't really follow economic fundamentals in that way. So for those who are looking at D9, very specific areas, landed ones, I'm sorry, that prices will always be sky high. Now, the thing about CCR, if you are looking for a property, the hardest part is actually looking for something that is larger than 2,500 square feet, 2,500 square feet. That type of units are like the landed homes. Their prices are always at a very high level. So even though the macroeconomic environment may not be that stable, you rarely see the prices gone down, unless at one point in time, we do see it come down. And the reason was because a lot of them are foreign buyers who are cashing out and moving to their cash to other markets like London, to Japan, those what we call the safe havens. But in today's context, what happened is Singapore is a safe haven in many ways. So I think whatever things that we see at the macroeconomic environment today, we may see even more cash coming to Singapore in different ways and forms. So I think for D9 properties, I think in terms of wealth preservation will be there. But if you are looking for small units in D9, then I will say that you have to be careful, because that target market, which is the expats at the middle to senior management level, they are not only looking at the area, but they are also looking at the RCR, OCR region. So that is why we see that kind of dispersion. So large units are fine, smaller units, you just have to be careful, make sure that the development is very well maintained. Okay. Next question is, increase in population and more cash-rich buyers. Will there be more cooling measures on the horizon? Well, I'm not the government, so I can't really answer that. But I think if we look at the price index, we look at the way how the government has initiated all their cooling measures, they always have one thing in mind, which is very consistent, I think, since 2012, even 2010, when they started having all the cooling measures, is to create a sustainable real estate market. And the market should not impact on the fundamentals, okay, of the financial system. That means it must ensure that the integrity of the financial system is kept intact. The third thing is that there will be generally the housing affordability must still be there, and everyone must have options, housing options available to them. So if I were to look at that point, right, given there are more cash-rich buyers, will there be more cooling measures? Personally, I think that they are still monitoring. If it continues to grow or expand at a very fast rate, they may do very fine calibrated measures targeted at certain segments, like what we have seen in the last round. So in this round, we see that they are targeted at certain segments of the market to bring down the prices. So, so I think people that are looking at it shouldn't look at this cooling measures too much. Rather, they should look at their needs and the long-term returns.
So I think I basically agree with Nai Jia. I think cooling measures cannot be a blunt instrument. You notice this particular round of cooling measures is only targeted at generally the high HDB transactions. That is very, very calibrated. You're going to see if there are going to be any adjustments, will be adjustments in those areas. Unless you see the whole market start running away, then they will adopt tougher stance. Unfortunately, we're not able to say whether it will be you know how the impact is going to be like. We can only guess, and that's our best guess.
Yeah.
So
now,
next one.
Wow, will a recession bring about a property market crash, stroke an uptick in prices and demand? Okay, this question, right? If we think about a recession, in all the past recessions that Singapore has experienced, the prices will correct. And the very fundamental thing that what we are seeing, it's very important thing, indicator is actually unemployment rate. When we see all the property market, when they crash, right, it always linked with unemployment rate. There's a sudden spike, and that spike in unemployment rate is very sustained. Now, in today's context, it's a bit more complicated because you have a lot of people having options to go into the gig economy because of how we democratize a lot of job functions today. So that alone helps to prevent that kind of recession from happening. So it's likely we will see some recession. The market may correct. I cannot rule out that may be a correction if the recession occurs. But what I think is very interesting is a lot of analysts are saying that this coming recession may be one that we've had recession, but low unemployment. So in other words, in terms of the housing price, we may not see that much of a correction if that occurs. Yeah. Okay.
I think something I must add. In 2008, I was working in a bank, heading up one of I was head of sales, and I got the opportunity to then look at the circumstances at that point in time. Now, a lot of the customers who had purchased the properties before at very aggressive pricing actually saw their properties drop. But ultimately, when you look through the whole cycle, they actually continue, they will reverse upwards. So if you draw a straight line, while it is trended, correction and so on and so forth, the trend has always been up, right, Nai Jia?
Generally, the trend is always up.
Yeah.
Unless there's a series of unfortunate events.
Yeah.
That one is only like, I think it occurred only in the certain periods, like I think after the Asian financial crisis.
Yeah.
But even then, that after a certain point in time, we see that. That's why when we look at real estate, you should look at the long term, because over the long term, you see that the upward trajectory is always there. And the reason is very simple. Whatever technology takes over, whatever jobs, there will be more people who will become richer. They have newly founded wealth. And when they have that newly founded wealth, what do they buy? They buy real estate again.
Yeah. Yeah. Okay, so the next question, if I paid off my 4-room HDB, my husband and I are CPF rich, is this the right time to start investing in another property, perhaps private property? So this is a question I'm asked all the time, whether the market is good or bad. People always ask me, hey, Paul, is now a good time to buy? And I've always given the answer that it is always a good time to buy. Why? Because there are always opportunities in the market that's available. Now, if a market is high and you buy even higher without doing the due homework, and the market turns on you, can be caught with your pants down in the short term. But there are a lot of opportunities in even in an upgoing market. People have need for cash flow, need to finish their complete quickly so that they can draw cash out. All these things are very, very, very present in the market all the time. I think, Nigel, you've seen cases like that, right?
Yes, we've seen a lot of cases. So even in times that we think that prices are sky high, sometimes is to broaden your horizon a bit. For every place, there is always a small little corner that we didn't see much price appreciation. Either people kind of forgot that place or have certain perception of that place is not fetching very high returns. To give you an example, right? Although this example will not be valid after today, maybe Little India, the Ferrer area, you realize that the prices actually are not that high, even though it's proximity to a lot of the MRT station, all those things near to the CBD area, because of certain perception of what it is. But the rental yield is extremely high. The price appreciation now, as people's perception change, you see that the value actually goes up there. So the other way to look at it sometimes is to study the Singapore master plan. Where is the next place that the government is going to focus their attention in? How will the future people live, learn, work, and play, right? You can go to some of the PGs, some of their reports where we survey the consumer sentiments that give you some idea where people are looking at. And yeah, and that is actually a good start to really think about where you should look at and what you should buy. So there are certainly pockets of opportunity, except that in today's context, there will be fewer and fewer.
Yeah, must do homework lah, ultimately.
Yeah.
Okay, so let's go to the next one. Okay, this one is yours, Nai Jia. You got a look inside your crystal ball. We would like to ask the prices for private 1 to 2 bedder. I'm assuming how they will appreciate in time to come.
Well, this one is an extremely challenging question because what happened is the private 1 to 2 bedder, right? You will see that in general, it really depends on location specific. At least for Singapore, it's very location specific. I think in today's context, if you have the choice, I would say 2 bedder probably has much more potential for appreciation than 1 bedder. And why? Because over time, we see that people need that additional room for doing the Zoom and work from home. And I think work from home is here to stay. I think in most of the companies that we talk to, they are having the hybrid version. Not all, but most. So I think the 2-bedroom unit will still be very useful in this context. Families are really getting smaller, but they don't mind that additional room. So I think 1 bedroom is still a bit challenging after a certain number of years. So I would say that 2-bedder will be have a better upside. But generally, it tends to move in tandem with the general price index. Yeah.
Okay. What are the options for foreigner with EP working in Singapore? Actually, you'll be surprised. The options are plenty. The only thing you can't buy, if you have EP, you can't buy HDB properties. You can buy any private property that's non-landed, right? So if you go to a condominium and you want to purchase a private apartment, you are allowed to purchase that because it's not land. So you are not allowed, foreigners are not allowed to possess land in Singapore.
Yeah, just one exception, Paul, is Sentosa.
Yeah.
Exception. That's why, yeah. So if you like the sand, the sun, the sea, and the rain, Sentosa may be quite attractive to you. So for those who are able to afford landed homes there, that is something.
Yeah, that's the only exception. You're right. Thanks for bringing it up.
No worries. Wow,
the smartest man in PG. Okay.
What's next?
With the tightening of mortgage financing, what are views of older HB properties? 35 of retaining the value given that a buyer has to shell out a huge amount for renovation? Or would we be seeing older HB properties starting to become cheaper or even worthless in time to come? I think this is more than just I think the first thing is when you say huge amount for renovation, what does that mean? I think end of the day we need to talk about reasonable renovations, because I can move into a 4-room flat, right, and put $500,000 in it. That is my personal choice, but is it a financially prudent one? I'm not sure about that. The other point is this: we're talking about government policy I read from what I read, government policy with regard to the 99-year tenure, right? That is a bigger consideration, which I think the government is working on. Like, sir, you have some comments there?
Yeah, maybe just a quick comment is that I think the government is still working out what the verse will be. So verse is actually the voluntary en bloc sale, I think. Yeah. So voluntary en bloc redevelopment. Yeah. So that one will come into place. So, and that will definitely have an impact on the price. Now, back on the huge amount for renovation, of course, this is really very case specific. But if you think about from a HDB flat per se, right? Usually people, when they go inside a new, whatever flat, they look at the valuation. The kind of the part about renovation, how much does it put into play is actually not very significant. So that aside, HDB flat usually people are designed for people to stay there, for affordable housing for people to stay there for a long time. So I think that is why the way to think about it is not as an investment asset. So if you are thinking of investment asset, you must think about what is your asset strategy, what are your financing, and when you go in and come out or refinancing and get that kind of cash flow. So, but the interesting part empirically is that do we see older HDB properties become cheaper? My quick answer is no. So one of the places that I really like is this place called Moguan Terrace. Yeah, you probably will see it. It's like I won't buy it because there's no lift. It's a walk-up apartment, but it's very charming estate. And if you look at that place, right, the last time I see it only left with not a lot of, the lease is not very long left. It was going for 700,000. Now it's still 700,000. You get 680K, but that is in a relatively worse condition. So I think again, it really depends. And I think with the thing about going towards larger apartments, you are seeing people moving towards that direction, and that actually helps to support the prices, even though the lease is much shorter now.
Moguan is at Tiong Bahru, isn't it?
Yeah. It's
the one, the tree address, the triangular one, that area.
Yeah. And then very hippie one. Then they got very nice cafe.
Yeah. Okay, nice. Then we go there, drink coffee, okay?
Okay, sure.
Will the price gap narrow between freehold and leasehold condos?
Going forward, this one actually depends on the market conditions, very interestingly. So when we see that the market is going very high, right? Generally, the freehold and leasehold actually go quite in tandem, parallel. But the narrowing, not really there yet. I think generally what we're seeing is freehold are about 10 to 20% much higher than leasehold. That is the kind of rule of thumb that we have seen. But the gap has narrowed for certain areas because you rarely see freehold integrated developments. So certain developments have certain attributes that offset that 20% kind of premium. So again, like integrated developments, usually they have another 10 to 15% kind of premium to it. So all in all, you see that actually, why does freehold developments, that kind of premium you do not see? Because when we compare the attributes, it's usually not apple to apple. So that's why I think, but in general, I will say that freehold properties always have their allure. If you are looking for something, right, the first thing that people will think about is freehold. The tenure is natural. Then when the tenure is no longer in the equation or due to pricing out, then you will see that people will move to the 99-year leasehold.
Okay.
Yes.
We are almost out of time. So mindful of time, we handle one more last question. Like, Jia, is that okay?
Sure.
So we sold our private property in August, but the OTP was open for 4 months till December 2022 for the buyer to exercise, as agreed by both parties, to give time for the buyer to sell their current property and also time for us to find a replacement home in HDB. The option fee was paid in August. Do we have a good reason to appeal to HDB to allow us to buy a HDB flat and not wait for 15 months?
Wow. So for this type of questions, right, for this particular case, I think you can try to appeal to HDB. You can also appeal to your friendly member of parliament. But that said, you must be prepared that the answer that they reply to you may not be favorable to your cause. But I will say that try out first. The probability is 50-50, but I will say that at this point in time, they may reject. The possibility of rejection is pretty high. I think you need a much sad story for it to succeed. But I mean, technically, the way appeals work is usually for those that really have genuine kind of reasons, that financial reasons. So I think that is why I think you can still try, but just to don't get your expectations that you get a favorable answer. Yeah.
Okay, looks like my bosses down there in the back have said that we can push the timing a bit. Okay. So 4-room flats have grown in demand for the past year. Do you foresee more demand with cooling measures, and in which areas? Let's continue. The second question is linked. Will cooling measures bring down the property prices? Will property prices continue to rise after 15 months? These two together, I think we can handle these two together.
Yeah, so do you foresee the demand with new cooling measures, and in which area? I think the demand, generally what we are seeing, right, are still very strong and robust. And the reason, we must actually go back a bit to the context why the demand is strong. Actually, during this period, what we are seeing are people who are in their 20s. And this group of people are what we say the baby boomer echo. So they are the children of the baby boomers. So you see that there's a spike in them, in their population group. So, and they all reach the marriageable age. And unfortunately, the supply chain for the construction sector were very largely disrupted during the COVID years. So that actually created what we see now, when there's a large growth in demand and a shortage of supply. So this demand and supply thing, I think it's not really the cooling measures that you will see moderating it. But what will be moderating is actually the new upcoming BTO supply that is coming into the market. But the BTO supply, the effect on the pricing will only comes about maybe a year or two later. So in the meanwhile, I think you will see that the demand is still very strong. It's just that people may filter into the 4-room flats, and because I don't think the existing 5-room or larger units, they are going to change their pricing at any point in time.
I think people are still trying to figure out what to do next, right? I think at this point, yes, you talked about this period holding back. We've had clients who come to say that I was planning to buy a flat or sell my property. I just want to take another few weeks or 2 weeks to think about it. I think people are still trying to sort that out internally, at least.
Correct. So I think we should see a lot of recalibration in terms of thinking about expectations. And then depending during this period of time, whether we see any external shocks, like, when North Korea shoot a missile across Japan, I was a bit worried, those kind of things. So whether it will translate into something else. But if there's not much external shock, things start to improve, you may see the demand actually revert very quickly. Yeah.
Okay.
Oh, executive mansioners
are in demand.
Yeah.
And the latest sale of a unit at Toei Drive at over $1 million, close to schools at the Bukit Timah belt, has raised eyebrows. With shorter leases left on these homes, is it worth buying?
Yeah. Since I actually buy one of this, I will say yes. But the real answer is, it really depends on what are your needs. If you really need the space, and you don't really care about future appreciation, you just want to stay in that area for the rest of your life, like me, then I think it's a good investment because you get to enjoy the space and then at a much affordable price. Except that, please note that mansionettes, the pricing compared to the flat one, which is called the executive apartment, is coming down a bit more. And the reason is because we are facing an aging population. So climbing stairs may not be that friendly as you grow older. So have to take that into account when you are buying mansionettes.
Are you staying at Toei Drive?
No. I'm not staying at Toei. Toei Drive is much more expensive than my location. It's very central, and they're going to have a MRT station and all those terminals at the Beauty World and the integrated development. So that area, in terms of pricing, is going to be very well supported, at least in the short run. So I don't think you will see the price will come down very immediately. So, but then for those kind of units, it will be a waste if you just stay only for 5 years because you don't really enjoy that kind of space and that kind of style of properties in Singapore, in a lot of places.
Okay, sounds like we are good on time. So Nai Jia, thank you very much for doing this with me.
Yeah, it's a pleasure. Yeah,
it's really good fun, guys. If you have any more questions, feel free to oh, I have supposed to do something. Just give me a minute. Hang on a second, just give me a minute.
you're going to give free ice cream, is it?
Okay, so do this. Sorry, So if you've got questions, you can scan this QR code and then direct your questions there. My team at PropertyGuru Finance will answer those questions and guide you through the questions and any thoughts that you may have. I think it's a good thing that we are given the opportunity to figure this out. Although the cooling measure came as a rude shock to some people, but I think overall this is something that helps us to take pause and look at what our plans are. I think it's important to know when you're selling something, you must know what to buy next. I think these are things which are fundamental, which some clients actually don't think about.
Yeah.
Yeah.
And maybe just to close off, when you're looking for a home, right? I think it's also very important to reassess your needs. What are your most important needs? Your family, or is it investment return? Those kind of things actually plays a very important role in your home search. Yeah, so do take into account of those, and then use the PropertyGuru platform. It's a very useful way to actually do your house search. Okay.
Thank you very much, everyone, and have a great weekend. Please feel free to again scan the QR code and give us your questions. Yeah.
Yeah.
Thanks, Nai Jia.
Thank you.
Nai Jia. See you.
Thank you
AJ.
all.
Okay, bye.